Idea Cellular will be with us. That's as far as the headlines from the various markets are concerned. Our guest, Sunil Dugal, CEO of Dabur India, is with us. Mr. Dugal, thanks much. First, a check on the rural consumption pulse. You have your finger on that pulse. What is the sense you are getting? Is there consumer down trading? Is there a definite slowdown in consumption? First rural, but urban as well.
I think the rural side remains fairly robust. There are pockets of softness in parts of south and west. But by and large, now with the monsoon having revived very strongly in parts of north and east, the demand side seems fairly steady. And at the moment, it's early days yet, but we are seeing no evidence of any down trading or any slowdown in consumption. That's
the drought part of it, Mr. Dugal. But, we are seeing a lot of more expensive consumer durables struggling with lower demand. You can see definitely in the cars and two-wheelers. Does it percolate down to FMCG products as well?
It perhaps could, but I don't think so. I think the down trading, if it happens, will be of a comparatively minor nature.
Okay.
So we're not too concerned about that aspect. I think what is concerning us a little bit more at this point in time is the revival of inflation, and we are seeing a strong uptick in commodity prices, crude, edible oils, the whole agri basket, and that would put pressure on margins because I think the headroom in terms of price increases going forward is a little bit limited. Because of the economic downturn, A, and B, last year everybody in the staples area took up prices by a pretty solid amount. So I think this is something which is a matter of concern, that there could be pressure on margins, albeit the fact that the demand side remains fairly steady.
Mr. Dugal, good to see you in. Actually, just wanted to concentrate on the volume expectations for FY13 then, because you started Q1 FY13 on a strong note of around 10% volume growth. Just give us a sense on whether you would possibly maintain that. Would it be better, or are you expecting something less?
I think the pivotal quarter is the third because a lot of our sales comes then, and if you're able to hold the line at 10% in the third quarter, then we should have a reasonably good year in terms of volume growth. I'm still pretty optimistic of having the volume growth in around 10% or so, but not to be taken for granted. I think a lot depends upon the festive season demand, which will peak in October and November, and that would, I think, determine the course of the year. But as I said before, the bigger concern is margins and not perhaps so much the volume growth.
What about ad spend then? There has been a trend of increasing ad spends in the past couple of quarters, and there is increasing competition, we understand at this point in time, from the FMCG space. Give us a sense in terms of margin pressure from the advertising segment. I mean, how much of a component would advertising contribute in terms of revenues, and what sort of margin pressure would it hence result in?
Well, the first two quarters it would be in the region of 14% because there was margin expansion on the back of low commodity prices. Now going forward in the third, if there is a compression of margins, there could be some lowering of A&P spends. I think that would be the prudent thing to do, as what we did last year. So then the ad spends could go down back to the 11-12% level which we saw last year. But it's early days yet. I think we are still wanting to hold the A&P spends at an aggressive 14-odd%. Whether the commodity price cycle will enable us to do that, it's too early to call.
Mr. Dugal, in the FMCG segment of skincare, shampoos and oral care, many of your products are well known, but they are not the first or not even a strong second. Will you see some rationalization in that area? Drop off some brands, concentrate more on any one of them?
Not really. I think we play a very specialized, very niche play in these very large HPC segments of oral, hair and skincare, other than, of course, hair oils, where we are pretty mainstream. So in shampoos, we are very siloed in the herbal shampoo space. Likewise, in toothpaste, we are number 3, but then we have largely a very herbal Ayurvedic range of toothpaste offerings. So it's comparatively easy and profitable to operate as number 3, 4, 5 if you have a niche play. So you can't mainstream your products and be number 4 or number 5 and still be profitable. I think that's pretty well documented, but we don't play the game that way in these big HPC domains. remains.
What about the fruit juice segment? Is that a major thrust area in terms of growth? How do the margins in that space compare with margins elsewhere, and what kind of volume growth in that space do you see?
See, the headroom in terms of growth is enormous because the market has barely been scratched. The competitive intensity is comparatively low. At the same time, the margin profile is inferior to health and personal care, so we've got to be a little circumspect on how much we invest there. But we remain committed to our beverage portfolio. We do have leadership in the fruit juice space. We are consolidating our position. We are enhancing capacity. So it will remain a very fundamental driver of growth, even though it may not be in the same league as our home and personal care, health and personal care in terms of importance. But it will remain very, very important from the growth driving point of view.
Mr. Dugal, you all did very well in your international business in the previous quarter. 24% growth is what you all clocked on a year-on-year basis. Give us a sense in terms of what sort of trends are you spotting in the international business, and what sort of trajectory can we expect on that front? Which are the hottest selling products, etc.? Just throw some light on the international operations if you could.
I think the Gulf business will drive growth as far as international is concerned this year. Next year, the Africa piece should be very important in driving growth. So the growth will come, even though there are pockets of concern in Egypt, parts of North Africa. The political and economic uncertainties may put some pressure on demand there. But overall, the international business should continue to grow ahead of domestic business, and we will see a re-emergence of profitability, which was eroded a little bit last year because of softer commodity prices prevailing in the MENA region in particular. So the overseas business is by and large on track, and we need to just put more momentum into the Africa growth, which we will do by the end of this year.
So how exactly would you do that? Would it only be organic growth that you look at in the international space, or would you even be aggressive possibly via the inorganic route?
We envisage organic growth in the current year. Going forward, there would be definitely some elements of inorganic. At this point in time, we are being a little circumspect in terms of prospecting for targets and doing any deals because of the economic uncertainty. It's perhaps a little bit better to sit on cash and look for value in which would emerge perhaps going forward. So we'll do deals only when they are attractive, both from the point of view of strategic importance as well as from the point of view of financial viability. Okay. So acquisitions will be a driver of growth, even though we haven't put any numbers or any targets behind how much we would seek from acquisitions.
Okay, Mr. Dugal, just to end where we began, since you say that perhaps margins would be your worry and not really so much volumes, give us an idea. Would it be a 20% year in terms of revenue growth? Would it be a 14% margin year? Some numbers, some guidance?
Well, very, very roughly, I think you can visualize a mid-teens revenue and profit growth for the coming year. But again, we are just 4 months into the year, so it's early days, but that's something which I think we should be able to achieve.
Fair enough, sir. Thank you very much for joining us with your thoughts.
You're welcome.
Encouraging to hear that you haven't seen too much of consumer downtrading, certainly not yet in rural areas except in pockets, and not so much in urban areas either. But I think the bigger fear he's pointing out to is the rise in commodity prices. Perhaps it's just as well that they're not able to pass it on. That might keep the overall inflation in check. Markets meanwhile seem to have recovered a bit. For just a few seconds, the Sensex and the Nifty appear to get into the green, but back in the red now. That index has been flat for a better part of the morning. It's the mid caps and the small caps that have been a source of worry, and they remain that way, though you'll have to say that the advanced declines have moved a little closer. It is still Idea Cellular. Will be with us next.